Look at me. I want you to listen to me right now because we need to stand in our truth about money, especially at this stage of your life. If you are approaching retirement, or if you are already there and maybe working a part-time job to keep your nest egg safe, you are facing a financial landscape that looks completely different than it did 10, 15, or 20 years ago. The rules have changed, inflation has eaten away at purchasing power, and the stress of managing a fixed monthly or bi-weekly cash flow is real. Today, we are talking about a major shift in how people are getting paid in this country, and it goes by the name of DailyPay. You might have seen the logo at a supermarket checkout, your adult children might be using it, or your current part-time employer might have just introduced it as a new benefit. But before you touch it, before you download an app, and before you change one single thing about how your hard-earned money flows into your bank account, you need to understand exactly what it is, what it isn't, and whether it is a blessing or a financial trap for your retirement years. Let's start with the absolute core problem. The traditional payroll system in America is broken for the modern consumer. For generations, we have been forced into this rigid cycle where you work every single day, but you only get paid every 2 weeks, or sometimes just once a month. Think about the insanity of that. You are giving your employer a free loan of your time and labor for 14 days straight, while your bills, your grocery needs, your prescriptions, and your emergencies do not care about a bi-weekly calendar. They happen every single day. This creates a massive, terrifying cash flow gap. And what happens when an unexpected expense hits you right in the middle of that gap? If you are on a fixed income or balancing a strict retirement budget, a $200 car repair or a sudden medical copay can throw your entire month into chaos. The fear that keeps so many retirees and near-retirees awake at night is the fear of the unknown expense. You fear having to dip into your core retirement accounts, triggering taxes and penalties, just to cover a temporary cash crunch. Or worse, you fear being forced into the predatory arms of high-interest credit cards, overdraft fees from big banks that care nothing about your financial well-being, or the absolute worst-case scenario, payday loans. If you pay $4 5 times a month, that is $20 a month, which is $240 a year flushed straight down the toilet. You cannot afford to waste your money like that. The deeper danger with DailyPay is psychological, and this is where I need you to be incredibly honest with yourself. When you have instant access to your wages the moment you clock out of a shift, it changes your relationship with your paycheck. It creates the illusion that you have more money than you actually do. Remember this fundamental law of money. DailyPay does not give you a raise. It does not add a single penny to your total earnings. It only changes the timing. If you transfer out 80% of your earnings throughout the month to cover daily spending, what is going to happen when the actual calendar payday arrives? Your official paycheck is going to be a ghost town. It will be a fraction of what you expect because everything you took out early is automatically deducted. If you have automated monthly bills tied to that specific payday, like your mortgage, your health insurance premium, or your car payment, you are going to find yourself in a horrific cycle of rob Peter to pay Paul financial chaos. You will be forced to keep taking early withdrawals just to survive until the next cycle, trapping yourself in a brand new kind of paycheck-to-paycheck dependency. So, how do we handle this? What is the actionable takeaway for someone in your shoes? First, if your employer offers DailyPay, you do not need to fear it, but you must treat it like fire. Fire can warm your house, or it can burn your house down depending on how you use it. You should sign up for the platform purely as an emergency insurance policy. Let it sit there in the background. Do not download the app onto your phone if you know you have an impulse spending problem. Knowing that you can access your earned money in a true crisis provides immense peace of mind, but it should only ever be used for an actual crisis, not for a dinner out, not for online shopping, and not for routine expenses that should be covered by a structured monthly budget. Second, if you ever do need to use it, you must use the no-fee options. Plan ahead by 24 hours so you can use the standard next-day transfer for free, or use their designated card system to avoid giving away your hard-earned dollars in transaction fees. Every single dollar matters when you are building and protecting a retirement life. Third, use the tracking features for visibility, not for spending. One of the best parts of these modern platforms is that they show you exactly what you have earned after taxes in real time. Use that visual data to reinforce your savings goals. Look at that balance and say to yourself, look at what I accomplished today. Look at the safety net I am building, rather than seeing it as a green light to spend. Your ultimate goal at this stage of life is financial security, predictability, and freedom from anxiety. True financial freedom means having control over your money, rather than your money having control over you. DailyPay can be a magnificent shield against the predatory financial institutions that want to profit off your temporary cash flow gaps, but it requires you to stand in your power, practice flawless discipline, and refuse to let convenience turn into a costly habit. Be smart with your cash, protect your retirement peace, and value every single dollar you have earned.